trading at its best.
Okay, I want to welcome everybody to the weekly webinar today. We've got a really important topic we're going to be covering, but first I want to kind of introduce myself to those that, if this is your first time to the webinar, we do these every Friday at the same time, and we've been doing it for at least a few months now. So I'm Mike Swanson, and I've been trading for about 9 years. You've probably seen me in different videos that we've emailed out, but you're going to get a lot out of this webinar today, so make sure you're using the chat box, and if you have questions or you need something clarified or you want to see something again, definitely use that chat box. Okay, so let's take a look at the topic for today. So we'll be looking at how to determine trend direction. Okay, so this is something that of course is very important in your trading, right? I mean, if you're on the wrong side of the trend, the market can destroy your account. I've seen it drop hundreds of pips, very quickly in a matter of a second, of course, if it's a news event. And a lot of times, and we'll show you this on the charts, a lot of times when there is a news event, a lot of times it follows the trend direction. So if you're on the right side of the trend, you can be on the right side of those moves for once. Okay? So we'll be going into the charts, and but first we're going to be talking about why it's important, why trend direction is important, who it applies to. Some people think you have to be a trend trader for to have to be a trend trader to care about the trend direction. There's much more. There's many more trading styles that need to know trend direction. Pretty much all trading styles. So we'll talk about that in a little more detail, and then we will look at the best indicator and method to use. And the last thing we'll do is get into the chart examples. Okay, so all of this, as always, is on the blog. You can go to TradeWestForex.com/blog. Let's bring that up real quick. Okay, so here's the blog post. We've been posting this pretty much on the same day lately. We thought about doing it earlier in the week, which we might do that eventually, but right now it's been pretty much before the webinar. We do the post. You can get a little summary of what we're going to talk about, and then the links to the sign up for the webinar are all in there. Okay, but let me just go ahead and show you guys. I'll bring the charts up here in a minute, but the reason I say that even if you're a range trader that you need to know trend direction is because the market, a lot of times after a range, will break out in the same direction as the previous trend or previous swing. Okay, so let me go ahead. I'm just going to bring the charts up. It doesn't make sense to be looking at the blog while we're talking about this, so give me 1 second, and you guys can follow along better this way. Okay. Let's get a fresh chart up here. There we go. So everybody should see my charts now. Everybody seeing the charts okay? I'll zoom in on these so you don't have a tiny little candlestick, and for those of you that are on different screen resolutions. Okay, good. So let's take a look here at the range like I'm talking about. If you're a range trader, you still want to know the trend direction. Here's why. Let's go ahead and look at an example. Okay, so here you have a range, right? The market's consolidating. You had the weekend. Here was Sunday open. Then you go into Monday. The market was in a range. It wasn't going anywhere. And it slowly, as you can see here, went into a pennant consolidation pattern, making lower highs, higher lows. It wasn't going anywhere. Well, the reason you want to know previous trend direction is because most of the time the market will break out in that same direction. And in this case, it was news that pushed it out even further. So if you're a range trader, you don't want to be selling at the top of the range. You would only want to be buying at the bottom of the range. Okay, so that's a little tip for range traders: is don't try to trade both sides. Don't try to I can go back, and here's another range right here. You don't want to be trying to sell at the top and buy at the bottom. And a lot of you have probably seen what happens is that trend eventually breaks, right? And what happens is you're on the wrong side. So let me show you an example here. You're selling here. Sure, that worked out great. If you're able to buy down here, you made some money. You're selling here. But at some point, it's going to break. And maybe you didn't get all of these. Of course, you didn't know this was a range. I'm gonna delete some of these. You didn't really know you were in a range until after this trade. Okay. So the only trade you really should have taken that would have been the safest out of all these would have been this buy trade. If you would have tried to sell on the way up, on the way up right here at the top of this range, or as it's getting ready to turn back down, of course that was going into the weekend, but you get the idea here is if you sell at the tops here, eventually the trend's going to break out and continue, and you'll be on the wrong side. So the safest way to play range trading when you know trend direction is to only buy or sell in the direction of the trend. So you can, just looking at charts, I'm going to give you guys a method today, but just looking at the candles, you can clearly see that price was moving up. So you would have only wanted to be a buyer at the bottom. Okay, now let's look at one more example. We can do this on any time frame and pair as well, but we'll just stick to the euro. Okay, so here's a good example of, this would have been a better example for the taking the range trades only in the direction of the trend. Okay, so here your range formed. Now you're waiting for it to hit the top or bottom, and like I say, most of you are going to take both sides, or you're going to exit your buy trade at the top. Okay, so you're a range trader, you buy here, and you try to sell at the top. Well, you can see the previous trend direction had a lot of momentum up into this consolidation. So we know that the price is more likely to break out here. We don't want to sell there. I'll take that buy trade, but I do not want to sell here. And sure enough, it would have broke out and you would have lost if you didn't know that. So that's I just wanted to quickly show you guys how this can apply to range traders as well. Is if you know the previous trend direction, you can stay and take only trades on that side, so you don't get caught in these breakouts out of the range. Okay, now let's take a look at how this could apply to even counter trend traders. You're probably thinking, how does trend trading apply to counter trend traders? Well, let's back up here. Let's kind of define a counter trend trader first. Okay, a counter trend trader is basically trying to find the tops and bottoms in the market. They're trying to find this bottom right here. They might have, they might have tried to buy here. It went up, but it came back down. Wasn't quite the bottom. They might have tried here on the way back up, came back down again. And eventually they get the bottom and it goes up. At least that's what they're trying to do. Okay, so that's the counter trend approach. Now, the thing is here, this one worked out great. The trend was shifting and going the other direction. But what about when they were trying to sell? What about when they were trying to sell here and the trend reversed and it kept going up? You probably found yourself in this situation before. Oops. I was trying to zoom those candles in for you guys, but I lost where we were at. Okay. Okay, sorry about that. Let's just get this so you guys can see. Okay, so it was hiding on that candle. Okay, anyways, let's say you tried to sell here. You thought the trend was turning at the top of this resistance. Well, of course it was wrong, and the trend went way up. Now, depending where your stop is, you could have lost a lot of money here. So counter trend traders could benefit from knowing the overall trend direction, because clearly here the market was moving up. I wouldn't want to try to counter trend trade this. Okay, so I'm going to put this all together for you. The idea is to know the major trend and only take trades in the direction of that trend, which means, sure, you can counter trend trade, you can find those tops and bottoms, But just like with range trading, let's only take the trades in the direction of the trend. Let's only buy in this case. There's a bottom, easy trade. Here's a bottom, market moves up with plenty of momentum. And that's what you're going to see in these examples today. When you're on the correct side of the trend in your trades, the candles will be much more likely to go in your favor. You'll see that those, instead of a constant, red, 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 red all the way down against you if you're trying to buy here, you'll start to see that the trend or the color of the candles will match your trade. You'll see the speed of the candle taking your, going in your favor. All of those things that are going against you right now, you'll start to see them shift in your favor. And we're going to, like I said, I'm going to show you many examples of this. But first, I need to give you guys the method that I use. Okay? Some of you might have seen this method before, but this will be a nice review for you. This is a very effective method. And what I found is there's a lot of indicators that you're probably exposed to. You've probably received plenty of emails about it, or you've searched on Google and you're trying to find the best way to determine the trend. And there's really complicated indicators, there's simple indicators, there's lagging, there's all kinds of stuff out there, okay? I've seen it all myself. And what I found is you don't need all that stuff. You need a simple method that works. And this is what I've been using pretty much from the beginning of my trading career. For almost a decade, I've used this method. And all it is a moving average and price. That's all we need. We don't care about a fancy indicator to determine trend. We don't need to overcomplicate this. Okay? So I can. Rob has a question about how do we know when the trend ends? Remind me, and I'll go ahead and show you guys how to do that as well with this simple indicator method. So all we're going to do here is go into indicators. Pretty much all trading platforms have this. We're going to go into moving average. And we're putting a 200 EMA on our charts. That's all we need. 200 period, exponential method, apply to close. Okay, and I like to usually make it, red or blue or something and increase the line size so it's a little thicker. Okay, but you can style it however you want. It's a 200 EMA. That's the short term for exponential moving average. Okay, so we'll hit OK on that. And all of that does is puts a line on our chart. There's not this big mess of, rainbow line. I've seen some crazy stuff where there's 100 lines on your charts painting a picture for you, and it's just, you don't need to get all complicated. This should be the simple part of your trading. Okay, so trend direction now, to determine it, now that we have this line, it's very simple. If the price is above the 200, this line, we're in an uptrend. If it's below, we are in a downtrend. And now you might want to review, I taught a trading method based on 2 moving averages, and I know we had some positive comments. I know Edgar, I got his post approved now. It wasn't going through for some reason, but that same day that I taught that method, he went off and made 193 pips. So that method works very well, and part of it is based on this concept of trend direction. Okay, so very easy. Yeah, Rich just says, I love that one. I've been using that ever since. So even Rich says that trading method I taught has been successful for him. So you guys might want to go review that. All of that's on the blog, tradewestforex.com/blog. Okay, and you can watch the replay on that webinar as well. So here you go. We've got the market came right to that moving average and bounced off of it and continued the trend up. Okay, so there's 2 things here. Is when the price is above it, the trend direction is up. Also, you can look at the angle of this line. If it's heading up, the trend is up, and the steeper it gets, the stronger the trend, right? If I zoom out, you can start to see that. As this line gets steeper and steeper, the trend just gets stronger and stronger. The moves go even faster. Okay? Now, let me just show you here. A lot of you were trying to sell against this. You didn't have the benefit of hindsight. Here you were thinking, okay, the market broke through, it's exhausted, okay, it failed again, now the market's going down, I'm going to sell, right? Some of you are getting in right here to sell. You don't know about trend direction, you feel like the trend's changing, and what happens is you get stuck on the wrong side of the move, and the market, the trend gets steeper and steeper here, stronger, pushing up with a ton of momentum. This is what happens every day to traders that haven't figured the trend direction out yet, is they're on the wrong side, all of the candles are the wrong color, the momentum picks up, and the market is just taking off and they can't figure out what to do. And they eventually get stopped out, maybe above support or resistance or whatever it is, but they're on the wrong side. So as you can tell here, you almost couldn't take a bad buy trade, right? Even if you bought the top. If you bought at the very worst price right there. Now, of course, it depends on where your stop is, but still, this was a very small drawdown on the 1 hour chart here. This is a very small drawdown, and you knowing that the trend direction is up, you could have held that trade and caught the even faster and stronger trend that continued. And again, if you even bought this top, if we didn't know what was coming up and you bought right there for some reason at the worst price at the top of that move, after it moves up, it was a great price. And the trend was very strong, very little pullbacks. So what you see, when the price is above the 200 EMA, you'll see that it takes many times longer for the price to come down than it does to go up. And that's what tells you you're on, that's how you can tell you have a good method for determining trend direction. Let me see if I can explain this a little better for you. Okay. You've probably, if you've watched charts enough, you've probably watched how, it takes several bars for the market to make a down move after an up move, right? It took, 1, 2, 3, 4, 5 bars just to go down a little bit. And then, 3 bars took it all the way back up to the beginning. And then you had this one giant bar that tested down. But you see, then only a couple bars and it's taken off again. And it's very strong. And then when a red bar shows up in here, it takes a long time to go down and it doesn't go anywhere. So 3 bars, it didn't go anywhere. 4 bars, 5 bars. So when it tries to go down, it takes forever and it doesn't go anywhere. Does that make sense? It's like when the trend is taking off, it's fast. There's momentum. When the market's going against the trend, it's a very slow process. And when you start to see these red candles, it takes hours on the hour chart, several bars just to make a small move. And then when it picks up green, it takes off very quickly again. That shows you're in the same, if you're buying, if you're looking at this uptrend of the 200 EMA, this is what shows you need to be trading in that direction. If you're selling, it's going nowhere, and you're going to be sitting on the trade for hours, waiting for it, hoping for it to break out and change direction. But if you, like I say, if you trade in the direction, you're going to find naturally that your trades turn out more successful more quickly. So that's the idea. What I was trying to explain here is just faster movements, faster, better momentum when you're in the right side of the trend. So let me see. I'll take a quick pause here. I got some questions coming in. Simple and powerful. Thanks for that. So that was a comment on that trading method based on kind of what we're talking about today. Looks like that was a pretty successful method we taught for you guys, which I know I've traded it myself. I've talked about it in a lot of things, a lot of my webinars over the years. It's definitely a very effective method for trend direction trading. Sure, I can cancel that news out so you can see the chart bigger there. How do we know? So the trend ends. I'll talk about that in a minute. The price is in a downtrend, but the price is above the 200 EMA. No, I don't consider this a downtrend. This, I guess you could say right here, this is a short-term downtrend. This is more of just a counter trend pullback, that will resume the major uptrend. So let me make sure we're clear here. What we are using the 200 EMA for is to find the major trend. I obviously, I know just as well as you do that, this is a downtrend right there, or a pullback. These are not real trends. These are attempts to change the major trend direction. But they are simple pullbacks. You could call them, downtrends or downswings. But what we're looking at, those are short term, and we care more about the long term, since that's what carries the momentum of the market. These short term moves don't carry the market very far. Now, of course, there's going to be one of these that eventually causes the market to change direction. And that comes to Rob's question on how do we know when the trend ends? Well, simply put, you don't know when it's going to end, okay? But that's not a problem for us. As long as if you review our webinars or the blog on risk to reward ratio, as long as you're keeping a good risk to reward ratio, it's fine when the trend ends and you finally do lose. Because during the times that you're on the right side, you need to be making the most out of it, keeping your stops tight and riding that move as long as you can and getting the best risk to reward. And then when you eventually do get caught in a losing trade, you know, maybe up here, this is the end of it. You tried to buy the pullback, it's going back up right here, you buy in and then you're wrong. And it seems like the trend is changing direction. Okay, well, don't wait till it comes clear out here below the 200 to close the trade. That's not what this method is for. It is not for telling you when to exit based on the EMA. Instead, you know, stick to the same rules you would take over here. If you take a trade, say you took the trade right here, it's going to break out, it's heading up, keep your stops tight and let the trade ride as far as you can. Like I say, we've got some different things we've taught to help you with this. Just go to the blog and review those. But as long as you've been doing that in all of your other trades, it shouldn't change here. If you get stopped out right here, that's fine. Take a loss. Okay? And if you for some reason got in again and took a loss, that's fine. You should be keeping these trades stopped small and making larger profits in those trend trades. That's what trend trading is all about, is making sure that you're making more profits on your winning trades than you are, you know, in pips that you lose on your losing trades. Okay. So I'll answer your guys' questions here in just a second. Let's just show, you know, when it finally does shift, okay, we can then look for sell trades below the 200. One little thing I want to point out here is don't take trades when the market's doing this, because we don't know which way the trend is going. Even though right here it's below, you think you could sell there, don't try to sell there. Unless you've got a trading strategy that tells you you need to sell, you could use it. You could say, okay, this does match, it's heading down, it's an early signal. But if you want to be more conservative and safe, wait till it clears. Wait till it clears that, you know, bouncing off of the EMA a whole bunch right here. Okay, after it clears and pulls back, now start to look to take your sell trades. You could be selling in here, you know, you could be selling over here. You know, that's when it's okay, and you know that you have a better chance of the trend resuming in that direction. Okay. Now you're going to find this is just a trend indicator. There's methods that could have gotten you out with profits here on these trades, or you might have taken losses, and that's fine. The key thing is to make sure you're on the right side of the trend. Okay. So for example, you wouldn't want to go buy right here, because there you go, the market took a big dive down. When it clears back up above, anywhere up in here, okay, any of this area is fine to buy in, but don't try to sell these. You know, don't try to sell down here when it's breaking lower. Now you have this uptrend. And you can clearly see buying would have been a lot easier on all of these pullbacks than trying to sell these slowly developing pullbacks on the on the opposite side of the trend. Okay, so that's coming back. This kind of further explains what I was showing you earlier about just the speed of the moves when you're in the direction of the trend are much faster than the counter trend moves. Okay, you'll see very slow movement down, fast movement up. Very, very slow movement down. It was just getting prepared for that big move up. Okay, so let me answer some questions here. Let's see. What's the lowest time frame to use this 200 EMA method on? The time frame, as I've always taught, is not relevant to the trading method, at least not with what I've taught. Sure, there's systems out there that have been curve fit and developed to only work on specific time frames and pairs. or they have certain reasons why it can't work. But with this moving average and trend direction method, you can use it on any time frame. The time frame only matters for how much time you have to watch charts. If you're going to trade a 1 minute, you better be watching your charts very actively. If you're going to trade all the way up to pretty much to the 4 hour, all of those time frames require a lot of your attention. As soon as you hit the daily charts, I've found that I can watch my charts, I can check on them once a day for 5 or 10 minutes. And if that's what you want to do, you should stick with the dailies. If you have time to watch charts and you have patience, because it takes a lot of patience to watch those 15-minute, 1 hour charts, then you can use this on those time frames. There's no restriction. So I can go to other time frames as well and show you this does not change. Okay, even the 1 minute, you see a very strong downtrend. It would have been much easier to be a seller here, and pretty much anywhere you sold, you could have made money on that. Okay, the 1 minute had a very nice, smooth move down there on this chart. Let's jump over to, here's today. Clearly when it's above and it's really steep, only buy. Don't try to get in and sell that. Let's clear these objects off the chart here. Okay, if the market's heading up right here, don't try to get in here and sell. Don't try to get in here and sell. It would have been very difficult. Only try to buy. Buy these pullbacks. Or if you're range trading, like I was teaching earlier, if you're range trading here in this little zone, don't try to sell those tops. Only buy the bottoms. Here's our 200 EMA saying it's going up. Only buy here and buy here, and you'll see if you would have tried to sell, right there, I'm going to make this a little bigger for you guys. If you tried to sell the top of the range, you finally got hit and you'd be on the wrong side. Okay, so let's see. That's the 1 minute. Just wanted to show you that's the best way to demonstrate that you can go in any time frame, because most systems don't work on the 1 minute, right? So here you go again today. Anywhere on this, buying would have been great. Fast moves, a lot of momentum to the upside. Every time you tried to sell, it would have taken forever, and you probably would have lost. Okay, you see what happens right here? You try to sell anywhere on there, it's a very slow process on the way down. And then, once it hits the buyers, it takes off in the trend direction very quickly. Very steep and fast. That's the side you want to be on, right? That's why I thought it's very important to teach this today, because I've found myself in these situations in the past where I just felt like, oh, this has got to be the top. I mean, you guys have done it yourselves, I'm sure. You've been right here thinking, okay, the market's having a tough time breaking up. I'm going to sell. This has got to be the top. I can make a huge profit if the market takes a big dive like it did over here. You guys sell, and then you're wrong. You're on the wrong side of the trend, and it takes off extremely fast, and you don't know what to do. You take a loss. Okay, then you get up here. Okay, well, I was wrong. This time it's going to head down. I've watched it. It's coming down. It's strong. You sell right there. What happens? Let's zoom in again. You can see this a little better. Okay, you're right there. You sell. Quickly shoots up the other direction, and you lose your shirt on the trade. Okay, so this is something that will help you extremely. I want you guys to practice this. I'm going to answer some more questions before we wrap up, but you'll find just this very simple method of staying on the same direction as this EMA is showing you, your trades will be far easier to manage. Like I was showing you, anywhere you buy in here would have been easy. The market was very easy to buy when it was above this 200 EMA. Anywhere in here. Where selling would have been extremely difficult to profit on. Even if you tried to sell right there and get a quick few pips, if you missed the boat, I mean, which was only 1 minute, 1 minute here is all it took to give it all back, that momentum took off and you're done. You're going to lose. On the other hand, staying on the right side of the trend and buying, even if you bought the top here, sure, it went against you, but then it quickly came right back up, and gave you profit potential. And then it, pulls back again, shoots up very quickly. You're gonna love the difference you'll see when you're on the right side of the trend. I know when I finally figured this out, it was so much easier to manage my trades when it wasn't taking hours of, or several bars of slow movement and then shooting against me. It's the opposite. Now, Ed brings up a good point. He says the 200 EMA is way too lagging, isn't it? Okay, well, let me tell you this. Moving averages are lagging indicators, and that doesn't affect us, though. We're not using a moving average like everybody else. Most people are trying to wait for a crossover, or they're using it as their method to enter the trade. We're not doing that here. We're simply using it to tell us, the overall momentum of the market. So that's why we don't care how long that period is. 200 bars is fine. We're not worrying about the lagging concept that kind of hurts a lot of moving average systems. It doesn't affect us here. I mean, you can see, look how early on the trend direction was determined. It's clearly not lagging. Now, when it does turn up here, nothing's going to tell you that this was the start of the trend. I mean, you did extremely well finding the bottom here. And of course, I think this is what you're talking about with the lagging, and this is not a problem. If you're managing your trades properly, like I was explaining earlier, when you finally do try to buy into this pullback and it doesn't work out and you take a loss, that's fine. Losses are part of trading. If you bought right there and you took a loss here, that's fine. Let the market consolidate. Let it bounce around like we were saying until it clears it. Now it's clear of the moving average. Now you can start to look to sell again, or to sell, and now the market's finally flipped. And that, this is the lag you're talking about, I'm sure, is that gap until but we don't care about that. We're not trying to get the tops. This is not counter trend. This is not trying to tell you where to take a counter trend trade. It's trying to help you make sure that you're taking trades that are in the direction of the major trend. That's all it's for. So today this would have been great help on the 1 minute to know only sell below here and only buy above here. You would have had a lot less trouble being profitable with that simple concept. Okay, now I don't know if we quite clearly covered the counter trend side of this, so let me just show you. I guess we did. Let's just show you a few more examples of that, even on this 1 minute chart. Okay, so counter trend traders are always trying to pick the tops. They're trying to sell. They're trying to find that top right there, and they're trying to sell right here. Well, as I've been showing you, these are those, if the market's going up and it's above that 200 EMA, you're going to struggle to make profit here. Counter trend trading against the major trend is not a good idea. It'll take forever for it to be profitable, and when it turns on you, you've got to be quick or you're going to lose, as you can see right there. So instead, a counter trend trader can still counter trend trade in the direction of the major trend. Okay, so simply here you've got a trend up. Here's your counter trend. Counter trend traders can take the counter of the short-term trade or trend. So what that means is you buy down here. You try to find that bottom and you buy in the direction of the major trend. Okay, your next one would be right here. Big move up. Now you're looking, where's that counter trend entry? Okay, well here the counter trend came in, pull back, and you'd be looking to buy somewhere in there on the way back up. If you don't get in at the bottom, that's fine. You get in here, it's not as big of a deal. Where if you're trying to get this move, oops, that didn't help us. If you guys are trying to get the tops of those the little sell top there, you're not going to be able to sell right there. That's extremely difficult to figure that out. So here, being late is not good. If you finally got in here, it's going to be very difficult to profit from that. Whereas, like I say, if you were trying to find the bottom of the counter trend pullback, you don't have to get in right there. You don't even have to get in here. You could get up here, and you're going to have a lot greater chance of being profitable since you're in the direction of the major trend. Okay, so let's see. I've got quite a few more questions here. Let's get these answered, and we'll wrap this up here shortly. Okay, so is the last fractal a good stop? I've always taught that using previous support and resistance or fractal points is not a good place to put stops, because the market constantly tests those areas and then resumes its trend direction. So, you know, I don't personally like to use those. You could use PipStat that we automatically determine the best stops for you, or you can just use a straight risk to reward ratio approach. So, you know, look at the ATR. I think we taught that in that moving average trading method, that simple trading method post. You guys can review that. We taught where you could put your stops and everything in that method. I think we taught the ATR approach. So just spend some time today or even over the weekend going to our blog, tradewestforex.com/blog, and just review some of the content there. We've had a lot of posts. You can find the recordings and the links to all of those. Go look in your email. We've sent recordings and information there as well. Just spend some time reviewing it, and if you put everything together, you'll have a pretty solid trading plan just based on the things we've been teaching in these free webinars and these posts. How long does price have to remain on one side of the 200 EMA to be considered the new trend? Okay, here's what I like to see. I just like to see that there's some distance. Let me just give you an idea here. Okay, if the price is heading up like this and then comes back down and hits it, this is the first attempt for it to go into an uptrend. So here I would not consider that the uptrend. Okay, when it comes back down and hits here, this is where we taught in that simple trading method you could look to buy. But you know, until I start to see some distance and a couple swing points above it, you know, I want to see that it's clearly moving up. You know, that I'm not seeing these just slightly higher highs and it quickly pulling back. You know, I'll watch it for a bit. I don't have to find the perfect point of entry. Okay, right here is when we finally have we have all this white space. I guess to try to give you an easy way to see it is just look for this. You know, there is no certain number of pips. It's just look for this big triangle, you know, of white space. When you have that, when it's very clear that the market's not coming down anymore to test, now you have confirmed uptrend. Does that make sense? Okay, now you had that forming over here. You had this big white space forming, but on the pullback, it was coming up very quickly. That was the first swing back, so you have to be careful because, you know, one push through is almost always followed by a pullback and then a continuation you would expect here. And here is where you would look to say, okay, trend direction is going down. So there's a couple just little nuances here you have to look out for, and you'll learn after just analyzing the charts yourself, just going back testing it and looking over the charts. But this one is very clear because this was the first breakthrough. You didn't really get any significant pullback till here, and it didn't go back down. So you look at this as a bounce possibly back into the original trend direction. Okay, let me clear all that off for you guys. You know, and then as it opens up even more and more space, the trend gets stronger and stronger. There's that shift down. Only one swing though. It comes back up. It didn't turn. So even though you have some white space there, you don't have that first test bounce back. So that's not a reverse of the trend direction. Here it is. Okay, here is your test down, bounce back, test down. You've got that white space. So somewhere right here, you're looking at, this is confirmed reversal of the trend direction. Now, I'm going to tell you, it's going to take some practice. Sometimes you're going to find it, and you've got to be quick because the trend doesn't last. And it's going to take some practice like anything else. It's not a perfect method. It's not going to work 99% of the time. It's not going to work probably 80% of the time. But that's fine. If it's working 70 to 80%, that's an extremely successful method that you can use. Okay. Let's see. A couple more questions I've seen here. Can we use different bar types? Range, Renko? Yeah, you can use those. If that's the kind of bars you use for your trading, it should work fine on it, as long as you're seeing trends. Candlesticks show us trends. The bars show us trends. As long as your Renko and your other bar types show trends in the market, then this indicator will work. What is the name of the other trading method you taught that a couple of today's listeners enjoy using? Let me just go over to the blog. I'll show you where you can find that. Okay. So we can go to TradeWestForex.com/blog. You can see here. I'm just going to post that in the chat so you guys can reference that later. Okay, if you go there, you can just start to scroll down a bit and start to review this stuff. But the one we're talking about in the webinar today is a simple trading strategy. So you might also want to look in your email for the replay we gave on that. You can watch the webinar replay there on that one as well. Or you can also go to our YouTube channel and you can find all of our recordings there as well. Okay. Let's see, a couple other questions here before we wrap up. The 200 EMA is exponential. So it's an exponential moving average. I just find that the exponential does reduce some of that, lagging when the trend starts to shift, but it's really not going to hurt you all that much if you use a simple. It's just I've just got used to using the 200 EMA. Is it a 50 SMA? No, that's the line we've been looking at is a 200 EMA. So as you can see, this is 200 exponential on the close. The reason we're using such a large period is we want to see the major trend. Okay, what you'll see in that simple trading method is we also put a 34 on, and we use that for the short-term trend just to make sure we can find entries off of it. So right here is an entry to sell at the bounce. And there's another entry to sell right here. So you'll probably just want to review that post in that webinar, and you'll see it's a very successful system. But we're not going to cover that much here today. Okay, thank you for this info on the 200, no problem. Can you use this on a 5-minute chart? Sure. I don't even use it on a 1 minute. I just wanted to demonstrate that you can use it on any time frame. Let me just zoom out and you'll see here. Okay, clearly buying trend direction, awesome move, lots of momentum on the 5-minute chart. Huge trend there. Buying anywhere on that would have been successful. Okay, 15-minute chart. Plenty of opportunity staying on the right side of the trend. 30-minute works, hourly, 4-hour, daily. Okay, look at how great this worked on that daily right there for about 2 years. If you were just staying on the buying side, you would have been doing extremely well in your trading for those 2 years. We can go to another pair, Euro-Yen. Here's Euro-Yen for the last almost a year. For the last year, if you would have been a buyer only, even in this struggling period here, buying trades would have been very profitable, as you obviously can see here. Yes, this should work for stocks as well. I know the 200 EMA is popular in all kinds of markets. Futures, stocks. Any thoughts when you move your stop to break even when you're in a trade going your way outside of a Momentix trade? I'll have to maybe have another webinar or post we'll do on that, maybe next week's. That's a whole different topic, trailing stops. Maybe we can have a trailing stop webinar. Do you know of a faster moving average that would help to confirm the trend by a crossover? That would be that 34. I suggest you just go watch that or go review the simple trading method post that we did, and that kind of helps you have a method for using this. What I taught today is not a trading strategy itself. It's to help you with your other trading strategies, to make sure you're on the right side of the trend and that your trades develop more smoothly, and that you those fast moves that you always see, that you're on the right side of them. At least, more of the time than you're on the wrong side. Sure, Rob, I can post that for you as well. You could even just go to YouTube and type in TradeWest Forex, which I just did right here. And if you even just click on Mike Swanson, that's where you'll get into the channel, and you'll see the previous posts. There's our last week's, what is a VPS? There's the compounding tips. There's the simple trading strategy. I'll just post this link here for you guys so you guys can review the webinar replay for the simple trading strategy. Okay, so I just posted that in the chat for those of you that are looking to review that trading method that others have been doing really well with. I have a problem identifying when the price ranges around the 200 EMA. Okay, let me go back to our charts here. Okay, so when the market hits the 200 EMA and starts to bounce around like you're talking about right here, okay, when the price is really close, the most conservative, the easiest way to do this is just don't do anything when the price is really close to the moving average like that. To define close, just look at the past movements. Okay, zoom out and see what you can see the difference. There's major separation here. If you waited till here to sell, that's fine. If you want to wait till there's that much separation, and then that's going to be safer than trying to figure out, okay, right here it's going up. There's not a lot of separation. It's just bouncing around. Okay, and even down here, when it shoots out, don't jump in trades all right away. When it's just emerging out of off of the 200, you need to wait for a pullback. That's the ultimate rule to avoid that problem. To avoid that problem, for those of you that are struggling with this, is wait for a pullback, and then the second leg, the second swing back, is when you take the trade. Okay, so on the way up, for example, here the market went above the 200, made the pullback, and then started heading up. So somewhere in here, you're going to be a little late, but that's better than getting caught in all this whipsaw and all this mess over here, right? So don't mess with all of that. Wait till you get a clear move above, a pullback, and then the market resumes the trend direction. And that you have some separation, that white space that we're talking about, where none of the candles are really coming down. The more separation you have, the better. Okay, over here you have all of that whipsaw. Okay, you weren't getting any pullbacks for resuming. Here it was just shooting up again. The pullback came all the way back. Can't use it. Here it went below. The pullback went all the way back. Does that make sense, guys? You don't want, you want to see a pullback, but it needs to be a pullback and not even come close to the moving average. Okay, so right here, it's moving up. Let's get my little drawing tool out. Okay, it's coming off that 200 EMA. Some of you are thinking, okay, it's heading up. It's too early. You don't get in there. You wait for a pullback. The pullback came all the way back. Now you have to start over. Now you need to move up and a pullback again. Okay, so you got to move up, pullback came all the way. You have to start over again. Okay, now it's in a downtrend. You don't do anything until you get a pullback. Well, again, it came all the way back. Now you have to start over. Comes down, needs to come back, and it needs to do this, and it's not doing it. It's coming all the way back to the 200. So what you need to see, even here, this is not good. It comes almost all the way back before turning up. You can't use that. You need some separation on the pullback. Here it finally works. Okay, you're not going to catch that first move. We're not in this to catch the initial break of the trend. This is just to give us the trend direction to start taking trades off of. And when it finally pulls back here, now you've got the trend direction defined. It's heading down. You see how that's different than all of this mess? I know it's going to take some practice. Just do this manually on your charts over the weekend and you'll learn and you'll start to see the difference. But hopefully this example makes it more clear. Okay, and then obviously you see that resulted in the development of the big trend. Like I say, when you're looking at it right here, it looks like you're missing out. And I know a lot of you want to jump in. You're like, oh man, the market's taking off. I'm missing out. And maybe this first leg, you're like, okay, now it's pulling back. I'm going in. That's not enough. You need to wait until that leg, till that pullback actually confirms and starts to head down. Okay, so it's okay to miss that first little bit. Like I say, once you watch what happens when a trend finally picks up, you'll see it was worth it. It was okay to miss out because look what happens. Now this looks like nothing. This looks like a tiny little move compared to the big moves you're seeing when the trend takes off. Okay, hopefully that helps some of you guys that are needing it clarified. We'll be repeating this webinar anytime soon. I'm trying to get others interested in this, and I must say I do like your style. Keep doing what you do. It's appreciated. Thanks for that, Jeff. Yeah, this will be sent out. Usually on Mondays, we send out the replays, and we put it on the YouTube channel. So just keep an eye out for your email and check back on the YouTube channel for those, and you can review the recording. Rich says, natural gas trades have been working really well using this simple trading strategy in the last 2 weeks. Yeah, sure. It works on, if there's a trending market, it's going to do really well. And the Forex markets are very good at trending. Stocks, equities, commodities, like Rich is suggesting, it works really well. You can go look at gold. Okay, take a look at gold. Huge uptrend. Look at that. I mean, you couldn't take a bad buy trade anywhere in there, where selling would have been very difficult to profit on. There is no opportunity to sell. I mean, your biggest pullback here was right there. Look how small that is, where your opportunity on the buy trades for your bigger risk to reward is huge. And that's what this is all about, is getting in and making the best out of that trade that you take, the best risk to reward. And none of these sell pullbacks would have given you that. But you can see that lasted 2 years. Staying above that 200 EMA, you would be catching that bull run. And then you could catch the bear run right here. You could be the guy that's selling gold making profit. Okay, there's your bouncing back. It comes down, makes that pullback right there. There's your first pullback confirmed to take a sell. If you review that simple trading method, you will see that we'd be in right here. There's our sell trade for a huge move. Very minimal risk. You could have got 1 to 5 on that risk to reward. Huge trade. Then you get, if you didn't get the first move, you could have got in right here. You could have got in right here. There's plenty of re-entry opportunities. Sure, you can use this with Momentics. Part of this trend strategy we use with the star system. So I think a 4-star trade is the difference between a 3 is this moving average approach. So we already implement this stuff in our trading strategies. But you can further use, this entire method with Momentix, and I'm sure it'll improve it. So if you guys are still having some questions on this or wanting to put this all into a full-blown strategy, I suggest you use those links in the chat. Go review the replay of the simple trading strategy. Look at the blog post. And then we'll get this recording up for you guys on Monday most likely, so you guys can review this one. Okay, and Rick will probably teach next week on the trailing stop. Maybe I can have a webinar all about trailing stops. So hopefully you guys enjoyed the webinar today. I'm looking forward to your guys' comments on the blog if you're having success with it, like Edgar had been hosting. And I just really challenge you guys, spend the weekend, take some time to learn this approach. Apply it to your existing strategies. Review this simple trading strategy where you can put it all together, and you'll start to see that it's a lot easier to trade when you're in the direction of the major trend. Okay, that's it for today, guys. I'm going to close things up. I hope everybody has a great weekend, and hope to see you in next week's Forex Weekly webinar.